Yo, salute to the Dream Builders. It's your boy Joe Michael in the building, and I hope you're feeling good, guys. So I'm here this morning. Um, it is October 2nd. We have a new month ahead of us, right? 2025. Um, quarter four is upon us. Um, and I wanna finish out the year with a bang, gang. And so what I have created is two things. I told y'all I was working on an indicator and it was coming soon. The indicator is done, as you can see. So two things we have here, guys, and I'm gonna get right into this. This video will show you how to use the indicator. If you are a part of my subscribers only group, you have access to this indicator already for free. You don't have to pay anything extra. You don't have to do anything because I will give you access to this. Thank you for being a part of Sniper Trade FX. This is for you. All right. Now, for everybody else who may be watching this and you're interested, by the end of this video, you're interested in the Sniper Trade FX price action suite and the Sniper Trade FX heat map, get in my DM, hit me up. We'll get you the indicator. Yes, you got to pay, but it'll be a fair price and you're going to get a lot of value. Okay. That's my word. So let's get into this. The first thing I want you guys to notice is with this indicator, we are identifying higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, and a break of that market structure. So the first thing I want you to understand is that market structure is very important in trading, right? And so that's something that I wanted to integrate into this indicator because a lot of times people teach and show strategies, but they don't teach the basics of market structure. And so this automatically gives you those levels automatically. You're able to see the higher highs and the higher lows. The reason why you want to be able to determine the market structure, because when you get to a point like this, a higher high, and we break the higher low and create a lower low, you're going to get a change in the trend. And sometimes these changes in the trend are massive. And these are the type of plays you want to catch. Now, if you look on the heat map, and let me make sure this is right. So on our heat map, these are EMAs, and the heat map is based off of the stochastic. Okay. So, and that's basically going to be able to pinpoint pivot points in the market, over bought and oversold points in the market. The stochastic pinpoints those points and allows us to get really sniper entries on overbought and oversold markets, right? Because that's the key. We want to buy low and sell high. That's always been the key. So the EMAs on the heat map are supposed to be the 13 and the 50. That's what I run. You can run any EMAs you want. I like the smoothness of the 13 EMA and the 50 EMA. Okay. Now, as you can see, prices at this higher high, right? At the top of the box, prices at the higher high. Okay. Now, if you look on the heat map, I'm going to put a purple line at this higher high. Okay. There we go. Now, at this higher high, if you look down at the heat map, you see that the EMAs are currently in a red area. So the heat map, whenever price is overbought, it's going to show red. It's going to show red in the heat map, and the EMAs are going to be at the top. When the EMAs are at the top and prices oversold and showing red like this, we want to look for sales. And it's very easy to identify. You see the EMAs at the top, you see the red. Oh, I'm looking for sales. Quick, easy, guys. Nothing for you to calculate. The heat map is visually showing you the calculation. And I want it to be so easy for you to see this, guys. Okay. Now, when the white EMA line crosses the orange EMA line, that's an entry. And that's right where this purple line is pretty much at. Right at that cross is where you want to enter at. So you're just waiting for the white line to cross the orange line, and you're waiting for the heat map to be red, and you're waiting for the EMAs to be at the top like that. You're looking for entries. You see that cross, boom, you get in there. When you see the EMAs span out like this, oh man, we're selling, and you want this to go through the yellow, through the orange, through the yellow, through the green, and into the blue, down to the bearish territory. That's what you want price to do, right? This is that area. This is that drop, that box. This is the same drop right here. This is what you want to be able to catch. Now, if you notice, I like to trade off of the daily high and the daily low levels. So with this indicator, you already have the daily high marked off right here and the daily low marked off down here. That's the range that I'm always telling y'all I want to trade in. So I built the indicator that just gives you that range. It's just automatically going to give you that range. Okay. Now, we talked about the EMAs and the heat map. Red means sell, and then when you're down here in the blues, you want to be looking for buys. Very simple. Very simple. If you spread out these candles, you will then see that the candles match the color of the heat map. And so now, not only do you have indication of oversold, overbought levels on the heat map and with the EMAs, right, and these colors, you have these same colors showing present inside of your price action candles. So you have the stochastic inside of your candles showing you oversold and overbought up here and oversold levels. When you see your candle blood red like this, just like the heat map, when you see your candles blood red like this, it's hot. Price is hot. Price is hot. You look at the blood red candle, price is hot, yo. And we need it to cool down. So when price gets hot like this and we get up to the highs like this, we want to see price cool down, guys. And so that's why when we get into the orange and into the lighter orange and price is cooling down, it's going from bullish to bearish. And then when we get down here into the blues, you can see price cooling down into the greens, into the light blues, the dark. Price is cooling down. Now when we get into these blues, we're in bearish territory now, guys. And when we get into these deep blues, it can actually get darker than this, right? When it's way down here. And I'll show you an example of that. You're in bearish territory. You're not hot no more. Price is cool, right? And so we want to start looking for buys in this area for when price heats up. We're in the play. Okay. So that's how this works. You use the heat map, the EMAs in the heat map, and you also use the price action candles. So we're using price action candles to determine if price is oversold or overbought. And then we're looking for entries based off of oversold or overbought conditions. All of this is inside of the indicator. You ain't got to do nothing. It's going to show you. Now check this out. Higher high, then we have a lower low. Then it's showing us the lower high. Then it's showing us a lower low. Then it showed us a lower high. Then it created an area of interest. And the reason why is because right here at this candle, we would expect this to go down to create, because this was really a lower high right here. We would expect this to go down and create a lower low after price created a lower high. Just like price created a lower high here and created a lower low, this was a lower high. This high right here was lower than this high right here. Okay, so if that's true, then this low right here should be lower than this low right here. Just like this one is. This low is lower than this low. excuse me, this low is lower than the previous low. So this low should be lower than but it's not. It's not, guys. And that is why we have an area of interest, because there is a deficiency in market structure, gang. Are you with me? And so the indicator does all this for you. You just need to understand what that means. And I'm explaining it. When you see a lower low and then a lower high, but you don't see a lower low right after that, you see a lower high, that's a deficiency in the market. And so the indicator calls that out for you. Yo, this is an area of interest, gang. Yo, we're supposed to get a lower low right here, but we didn't. So let's mark this. What's going on here? And so price is beginning to change in market structure. Okay. So from here, you could determine, well, if I don't get a lower low, I got a higher low, I could expect to get a lower high, right? Higher high, lower high, lower high, right? These are pretty much equal, but no, this one's a little higher. So yeah, this is a lower high. So lower low, then I got a lower high, so I got a higher low, so I could expect a lower high. And so the indicator expects that for you and gives you a point of interest, and then boom, we take off up to the area of interest. This is a demand zone, guys, and this is a supply zone. A demand zone is where a lot of buyers are hanging out at. A supply zone is where a lot of sellers are hanging out at. So boom, it gives you the play. Now, what's interesting is because the trend has changed, because we were bearish, then we had this deficiency, this area of interest, right? That means the trend is changing to going this way now. So because of that, we understand that whenever you have, this is a rule of thumb, I don't care what strategy you change. The next thing I'm about to say is a rule of thumb. It doesn't matter what you trade. Whenever you get a strong impulse to one side, you're always going to get a pullback, a 50% retracement. Price is going to retrace 50. Whenever you get a strong impulse, you're going to get a correction, guys. That's a rule of thumb. It doesn't matter. It doesn't matter what anybody says. If you get a strong impulse like this, you're going to get a correction back up. If you get a strong impulse like this, you're going to get a correction back up. This is called a retracement. Okay, guys? That's called a retracement. You understand that? And so what I've done with this indicator is we have a built-in auto Fibonacci. And what the auto Fibonacci does is it calculates this retracement. So if you get a strong impulse up, it automatically throws the fib. And these fib levels are retracement levels that you can use as entries. So strong impulse up, boom, you could take profit here. Then you get a retracement. When you get a retracement to one of these fib levels, you're actually looking for an entry. You're actually looking for an entry for this to continue up to the high, for this to make up for this fair value gap right here, this huge fair value gap. They need to make up for that. And so when we get a deficiency, we had a lower low, then we got a higher low, then we got another higher low here. So that means the trend has changed, guys. You understand market structure. Then we get a lower high because this high is lower than this high. So we got a lower high. We got an area of interest. Boom. We get an impulse up, and then we get a pull back to the 0.236 Fibonacci retracement level, guys. And from there, we could begin to look for entries into the continuation. Yeah, gang. And also on top of that, we're watching the heat map. So when we get this right here into this area of interest, we get a cross right here. We get a cross right here. And let me blow this up for you so you can see that. Look how clean that is. When we get into this area, this blue area, we get a cross right here of the EMAs, and boom, we get a strong impulse up. So this is an entry that you can take every time. These crosses. Boom, right here. You see this cross? Let me put a purple line here. Here's another entry, guys. Boom, right there. In the red area, you sell. In the blue areas, you buy. Okay? It's beautiful, right? Spent a lot of time on this. Look at where the purple line is, right at the area of interest, right at the bottom of this run. So you're catching these plays seamlessly just by using the indicator. Boom, we're catching this play, boom, up to the right up here. Boom, we got a pullback. We got our Fibonacci levels right there. So we're not scared. We're like, all right, we know that we got to retrace. We got to pull back. And then we're going to either hold this position and understand these are our levels that we're going to retrace to, or we could get out right here and then look for a re-entry off of one of these fib levels. If you don't know about the fib, do your research. It's a highly accurate strategy. Old school strategy. The stochastic is an OG indicator, and that's what we're using. We're using the stochastic for oversold, overbought levels, and then we're using the Fibonacci for Fibonacci retracement levels. Now, if you see this, go to this level, and let's say it pulls back and it breaks through all these fib levels and just keeps selling down, then that's an indication. That's an indication that we are still in this bearish trend. You feel me? That's an indication that we are still in this bearish trend. Because understand this, the higher high is up here. If we don't break this higher high, we are technically not bullish yet. And this is technically a higher high, lower high, lower high. So that's technically valid. But now when it comes to the lower lows, and we didn't get a lower low, that was a deficiency, and we could have, that tells us that price is going to do this when we get that deficiency. That lets us know price is going to boom, surge, right? Now, I trust the fib. I trust this is going to continue up, man, because this plays happens a lot. Mind you, this, guys, is on the 1 minute time frame. So this, you can use this for futures. You can analyze your futures with this. We analyze the 1 minute time frame. I bet you didn't even know this was 1 minute. So just imagine on higher time frames, you're going to get different reactions. We could jump up to the 1 hour and you can see what it looks like on a 1 hour too. This is where we were trading on a 1 minute, right? Inside of these candles. But look at this. We got a lower high, then we had a higher low. And then boom, we get into our area of interest. We get into our area of interest. We're in the area of interest and we're at the top. Mind you, we're still trading off of the daily high and low. I have that marked in here. So we still have the daily high and the daily low. Price did not break the daily high. Price did not break the daily high, guys. It rejected off the daily high. So we're trading within this. Now, here's some other things I want to show you. And when you're up here, you're looking for this to cross for sales. Look how red this candle is. It's blood red. You're in the blood red. You're overbought. This is an overbought market. It's overbought. So are you going to look for buys right here? Not necessarily. You're going to want to see a pullback, a Fibonacci retracement into these fib levels, and then a up, right? You want to see a pullback and then a up, a pullback and then a up, because it needs to cool off. It's burning hot. It can't keep going when it's burning hot like this. So it needs to cool off. We use that burning hot as an indication for entries for us. We're waiting for it to cross to the downside and catch one of these pulls. So you can catch this and then use one of these as a take profit, right? Or you can wait for these to hit these levels and use this as an entry to the upside. So this is a very versatile way to trade. Nigga, we're catching it from up or down. We don't care. We going off of the fib. We're not committing to one direction. We're waiting for price action. Price action is going to, if price action comes and bounces off of one of these levels, we're going to buy. If price action comes and breaks through our area of interest, breaks all the way through our area of interest, then we're going to sell. then we're going to sell down to this level down here or this level right here. You understand me? We are tapped in to price action. This is the price Sniper Trade FX price action suite. And this is the Sniper Trade FX heat map. Okay? Now, we have some more things I need to show you. If you go to the Sniper Trade FX settings, we have a couple of things you can add and not add. So the first thing I'm going to show you is order blocks. Boom. This I add order blocks to your chart. These order blocks are key levels where buyers and sellers like to hang out at. Obviously, these are bullish order blocks because you see rejections to the upside. You see rejections to the upside from these order blocks, from the higher lows, right? So we're using higher high, higher low, you can enter. Boom. Higher high, higher low, you can enter. Boom. Lower high, higher low, area of interest, you can enter. Boom. You can catch anything. You can catch anything, gang. This is going to lay it out for you. Those are our order blocks. I want you to understand the markets when you're on your own. I don't want you to depend on anybody but your own analysis. And that's what this is for. You feel me? That's what this is for. That's the order blocks. Now we also have fair value gaps. So this will show you all the fair value gaps. If you're a fair value gap trader, I got something for you. If you like to trade order blocks, I got something for you, right? If you like to trade the fib, I got something for you, right? If you like to trade the stochastic, if you want to see if price is overbought, oversold, and you want your candles with the heat map inside your candles, I got something for you, right? If you like to trade market structure, lower highs, lower lows, I got something for you, right? Sniper Trade FX, baby. So check out these fair value gaps. We got fair value gaps. You can also use these as confluence, fair value gaps. We got fair value gaps. We got order blocks. We got the fib. I'm just showing you everything that we got. You can use all these different things. I showed you kind of my strategy on how I trade, and now I'm just going through what this indicator can do for you. What else does it have? And we got some shit. It's a price action suite here. This is a price action suite. We got multiple things. Fair value gaps, showed you the fibs, right? And then we also, last but not least, we have externals and internal market structure. So now you're able to see the change of characters and the break of structures to give you more confluence when you're trading, guys. To give you more confluence when you're trading. Boom. We got change of characters. Boom. We got with the change of character, you got a higher high. You got a change of character. You got red candles. You know that's oversold. Oh man, we're oversold right now. You look at your heat map. Boom. You get a cross, right? You get a shift. You get that shift right here on this candle, on this oversold blood red candle that stands out so hard. Like, man, why is that candle so red? It's because it's overbought. It's because that candle is so overbought that it's just bleeding. You know what I mean? That's a great representation though, right? You feel me, guys? It's bleeding red. So you come here and you look at your heat map like, man, that thing is, you're looking at the temperature. That's what the heat map is for. It's a representation of data, but it's showing you visually using colors to make it very easy for you guys. You don't have to calculate all these different, oh, we're at the 30%, all these numbers. Nah, just look at the color. Just look at the color, gang. This candle is blood red. I don't want to buy right here. It's overbought. You feel me? So you look here and you see the cross. You see the cross. You're like, man, I'm about to get in this. And then boom, you get in right here or right here on one of these candles, right where the cross is. You see that cross? You get in right where that cross is, gang. And boom, you ride this all the way down to the blue. You ride the wave all the way. You ride the heat map all the way down to the blue, gang. You ride this all the way down to the blue. Okay. You see how that works with the heat map? All the way down to the blue. When you get to the blue, guess what you got? The heat map is showing you, oh man, we got another cross right here. Price is about to start heating up again. So what do? You get in on that cross. You get in on that shift. What, right about there? You get in on that shift. What kind of candle is that? Is that a doji? Look at that doji. Look at that perfect doji right there. Crazy. That's how accurate this thing is. Price action. Let's get this. Put it right on that doji. That's where it called it at. On the doji. On the doji. And then guess what you do after that? You ride that thing on up. You ride that thing on up. You hear me? This is great for futures. You ride that thing on up, right? You get in at those crosses. So this is a great tool that you guys can use to elevate your game. Elevate your game, guys. Elevate your game with this. If you're a part of the Sniper Trade FX subscribers only group, right? The Sniper Trade FX Institute, the Sniper FX Institute. If you're here, a part of the FX Institute, or if you're a part of my group, not here, but if you're a part of my group, you get this for free. Thank you. Salute. I made this for you. All right. This is for you. This is for you. Now, if you're not a part of my group, join the group. Join the damn group so you can get this for free too. Duh. But if you got other things going on, I'm never gonna force you to join me. You ain't gotta join me. You could just buy this outright. I'm gonna give you a fair price. Hit my DM, okay? And I give you a fair price on both ends. These are two separate indicators. We got the Sniper STFX, Sniper Trade FX price action suite. And then we also have the Sniper Trade FX heat map down here at the bottom. These two indicators basically make one strategy and it's super fire. If you're interested in something like this with more confluence, and you don't have to have all this stuff on, you don't have to have all this stuff on the chart, guys. You could take all this stuff, you can use this as you need. We could take the order blocks off. We could take the high lows off. We could take the previous day off. We could take the fibs off, and we could just use the heat map and fair value gaps if that's what you want to do. In the background, you see this multicolored background. Those are different sessions: London session, Asian session, Sydney session, New York session. Okay, but yeah, you could just trade price action like this and just use the heat map and just trade shifts. Catch a shift right here, boom. Right? Catch a shift right here, boom. Like, you know what I mean? You don't have to have all that on there. You could do this however you want to do it. You could switch it up, um, you know, however you want to do it. So I like to trade with the previous day high. I like to trade. Sometimes I use fair value gaps to get more confluence. I'm always using the fibs. You know what I mean, to get those retracements, those pullbacks, and enter hard on the when price pull back, you enter hard on these fib levels, and then boom, you shoot up. Right? Y'all know about that, right? I know a couple of educators who teach like that. So yeah, we got that too. We got it all. We got it all right here, man. So I want you guys to enjoy this. DM me if you want this. If you're not a part of my subscribers only, DM me and we'll chop it up. If you are, I'll be dropping this real soon and you will have access to this. Salute to the dream builders. I love y'all, man. And let's go out. Let's go out this year with a bang. Let's finish the rest of this year with a bang, using the Sniper Trade FX price action suite and the Sniper Trade FX heat map. Love you guys, and I'll see you on the next video. Salute.